Okay, good morning, everybody. I wanted to thank you again for joining us this morning. This is our 7th installment in our COVID series of webinars. So again, thanks for setting aside some time this morning to join us. For those of you that are new to this webinar series, my name is Jason Flynn, and I am the Director of Human Resources and Client Services for Prestige Employee Administrators. Along with me again this morning is Carol Sawyer, who is our Tax Manager. It's also nice to have, again, Andrew Lubash, who is joining us this morning. If you've attended these webinars in the past, you know that Andy has been involved with NAPIO for the past 5 years and is his current chair. So it's always nice to have that type of insight here on our calls. Andy is also the principal of Prestige, so not just insight within the industry, but certainly within Prestige as well. Also, for the first time, we'd like to introduce Malcolm Slee, who is a partner at the Groom Law Group, and Carol and I are certainly very happy to be accompanied by both of those gentlemen today. So, as for today's agenda, Andy and Malcolm will be kicking things off this morning with some legal updates. Malcolm is going to specifically be getting into issues that employers should consider for getting employees back to work. We all know that that's a hot topic these days. Then Carol's going to take over and provide some updates on the SBA Paycheck Protection Program loan process. Then I'm going to circle back to the return to work topic where I'm going to provide some guidance on a detailed process that we put together for employees to follow when looking to bring back their employees. Now, as a reminder, all participants will be muted throughout the webinar. However, if you do have a question, I urge you to use the Q&A feature within the webinar and direct the questions to the panelists. We will do our best to answer all the questions for any incoming questions that we see. And a copy of the presentation will be available in the COVID-19 Resource Center of the Prestige website following the webinar. At this point, I am happy again to introduce Andy Lubash, who's going to say a few words and take it from here. Good morning, Andy.
All right. Good morning, Jason. And do you hear me now?
We can hear you now.
Do you hear me?
Yes, we can hear you.
Last week, obviously, we had some technical difficulties. First, again, I want to thank everyone for attending last week as well. Daniel Harris, who was the Vice President of State Government Affairs, who actually, that's what I was chairman of for 5 years, working with Daniel. And, you know, he reviewed what was happening in New York and New Jersey, and that was just mind-blowing just to stay in touch or keep track of what's happening in 2 states. So obviously that's happening throughout the country. And again, the value, again, of what we're bringing to you, again, we're hoping that we find all this information useful. And again, it's a very trying time, and, you know, we're here for you. One of the advantages, and I joke about it, as being NAPIO chairman this year, was I picked a heck of a year to be chairman, but I picked a heck of a year to be chairman. Over the last 7 to 8 weeks, again, the association and what we've been able to bring to the table with regards to guidance for member PEOs as well as businesses of PEOs has been invaluable. Malcolm has been a very big part of that. I think to the point that myself and Malcolm, I think, are tired of hearing each other's names at points already, because every day there's something different. And yesterday was the perfect example. Obviously, we are aware that the 4th or 5th round of stimulus is now being formed. The House released a, what was it, 18 or 1900 page document yesterday with their wish list, and they're going to be voting on that on Friday of what the next round of stimulus should include. It's all over the place. So again, what ends up happening is that we go into a pretty deep dive. Malcolm's firm, Groom, is retained by Prestige. We use them with regards to our guidance as one of the firms that we do have retained. We use them for guidance that we can pass along to you, along with other firms as well. And obviously, we'll be going into another deep dive shortly to keep you guided. The other thing that I guess a lot of people have been asking about, and it's kind of 3 weeks late, is the PPP repayment, the forgiveness. There was supposed to be guidance issued 3 weeks ago, and every day we hear it's coming, it's coming, it's coming. And again, what seems to be happening in Washington, and Malcolm may touch on this as he's speaking, because again, Malcolm is very plugged in, along with Seth Peretta, who is our speaker next week, with what is happening. I mean, you can't get any closer to it than Malcolm and Seth are. So you get a lot of inside information and why it's nice to be on these webinars. But what we're hearing is that there is a bipartisan team working on this, but they are coming up with, I guess, roadblocks and things they never thought of. Obviously, as we're seeing with regards to large organizations being able to get the loan. But again, they're having their challenges. Obviously, there's partisan politics involved as well. Hopefully, we will receive some sort of guidance shortly, again, because we are pretty substantially through the process. So, again, these are very trying times. The one thing I want to reiterate before I turn it over to Malcolm is we are here for you. Again, everyone's going to make a sneer, but again, you can even contact me. My direct extension is 917-258-0223. My cell is 516-680-5021. Again, those are numbers that you can reach me directly. I know after 2 weeks ago, somebody did give me a call. I do hear from you. We are here for you. If you have any questions, you have any concerns, you have anything, reach out to us. If you're not getting an answer and you need to get to me, get to me. Again, we want to make sure that we are, again, responding to your questions and being proactive. And again, like I said, being NAPIO chair this year had a benefit because I guess I'm in the room where it happens, so I can disseminate information to you almost sometimes prior to it actually being out there. So with that, again, Malcolm, I have worked with Malcolm. I've been involved with NAPIO for 21 years, not 5. 5 was government affairs, but for at least 7, 8, 9 years. Again, I can't say enough wonderful things about him. I think you will find his material to be very informative. Remember, there's a Q&A panel. Ask questions. We'll be able to get them to him afterwards and have them responded to. So, again, I hope everybody remains well and safe. And Malcolm, go ahead.
Thank you, Andy. Appreciate the kind words. And I will say, I think this year picked you as NAPIO chairman. You've done a phenomenal job under very trying circumstances in getting information out to the PEO industry. So we appreciate your partnership. So today's discussion, I'm going to be talking very generally today about issues for employers to be considering as we start moving and we start the national discussion regarding reopening the economy and getting back to work. This slide covers all the topics that I'm going to be touching upon. The purpose of this discussion, it's going to be from, it's going to be sort of high level. We're not going to get too much into the weeds here. As you can see, we're going to talk about a lot of different things. I view the purpose of today's discussion as really to kind of, get everybody's brains kick-started. Everybody on this call, I'm sure your businesses are all very different. You're in different areas. You have different needs. You're different sizes. You're in different locations, and all those factors are really going to impact how you decide to approach the next couple of months. So we want to just sort of touch on some of the really key big areas that you need to start thinking about. Federal and state OSHA. We'll talk a little bit about transmission and liability considerations, but then we're going to really sort of focus in on testing considerations, return to work staffing considerations with regard to new hires, and then we'll touch on some additional issues like we're going to talk a little bit about the PPP loans, which Andy just covered, and we'll also talk a little bit about what you might expect to see in future federal COVID-19 legislation in the next month or so. So let's kick off the next thing by talking a little bit about sort of where we're at, again, just kind of to frame the discussion. We know we're dealing with COVID-19. It's a highly transmissible novel coronavirus, and its transmissibility is obviously the key thing that makes it so devastating. It appears that most individuals who contract the virus actually do appear to recover without any sort of long-term consequences, and that obviously is good news. But as we are all too well aware, many individuals who do contract the disease unfortunately end up dying or may have more significant negative health effects, which are not currently understood at this point. The folks who've had to have extended hospital stays, how will their bodies be able to recover long term? We know that currently the COVID-19 viral and antibody tests are extremely hard to obtain. There isn't any sort of organized federal program for providing those tests. It appears that mass testing for viruses or antibodies, which is how some public health experts thought we were going to get the situation under control. Just seems like that level of testing is probably still at least weeks or months away. And we also know that due to recent legislation and guidance that's come out over the last few weeks, employer-sponsored plans are now required to provide coverage for COVID-19 viral and antibody testing without cost share. No requirement at this point that those plans provide coverage for treatment without cost share, although that is a feature of the House Democrats' new proposed bill. The next slide covers what we don't know. We don't really know where we are on the curve. There's been some fairly positive news in the last couple of days that suggests we may be starting to decline a little bit, but it's not really entirely clear. Again, the lack of widespread testing makes it difficult to measure. We don't entirely know right now whether the presence of antibodies indicates immunity from the virus. Again, there's been some positive news on that front, but there's still some uncertainty regarding that. Seasonal effects. A lot of people are hopeful that as we move into the warm weather months, the effect of the virus will not be as pronounced. And then, of course, there's the concern that once the weather gets cold again in the fall, that we're going to have a second wave, which could potentially be devastating. We don't know when and if a vaccine is going to be available. And a big thing we don't know at this point, if and how employers could be held liable by third parties if they don't take actions to maintain a safe workplace or retail establishment. Big open question in terms of liability, and something Congress is very attuned to. Obviously, anyone who operates a business is very attuned to. This is just really uncharted territory because I'm not sure we've ever had sort of a workplace risk that was this widespread and this potentially devastating. And then on the next slide, what we don't have currently. We don't have a clear consensus about when and how businesses should be allowed to reopen. That's obviously the big national debate right now, and it is extremely polarized. And we also don't really have clear rules about what employers must or even can do in order to establish a safe workplace for employees and customers. So again, purpose of today's discussion is to kind of talk about some of these issues. At this point, certainly no silver bullets, no clear guidance on these issues. But again, we want to at least sort of frame the things that we think you guys should be thinking about as you move towards reopening. So on the next slide, we're going to start our discussion by talking a little bit about OSHA. So again, one of the first questions that folks have been asking us is, okay, well, we're thinking about reopening. What types of OSHA rules do we need to consider with regard to COVID-19 specifically? The answer to that is that the Trump administration has, we think quite purposefully shied away from coming up with specific workplace safety rules relating to COVID-19. Part of that is obviously relates to the unknowns that we've just been talking about. I think another big part of that is, they are sensitive to coming out with a whole new set of widespread OSHA rules and regulations related to COVID-19 that employers would have to, wrap their heads around at the same time that they were trying to reopen their business and deal with all the other, enormous financial pressures that we've gone through over the last couple of months. So what we have is really the existing OSHA guidance. And if you go over to the OSHA website, you will see OSHA has posted some information relevant to COVID-19, which we would encourage you to check out because it may be helpful. Again, it's really general advice that existed in the OSHA universe previously and that they are, now trying to use specifically with regard to the COVID-19 pandemic. But it's not anything that really requires you to do anything new related to COVID-19. You'll see on the slide here, we highlight the PPE standards, probably the first thing that folks think about in terms of, equipment that might protect you from the virus or protect others from the virus, using masks, using gloves, using eye and face protection. And you'll see there, again, it's very general. What OSHA says is that effectively the PPE standards are needed when job hazards warranted. If you read through the OSHA guidance that's there, what they do is they break down job descriptions into really 4 categories, which are very high risk, medium risk, and low risk. High risk and very high risk are generally professions where you are really working in the medical arena and potentially interacting with individuals who may have COVID-19 on a regular basis. And the implication there is that those folks certainly need PPE. Medium risk would be more like the retail environment where you might be in close contact with other people, but you don't really know whether or not they do have COVID-19. The suggestion there is that PPE may be appropriate, but it's determined really on sort of a case-by-case basis as opposed to any sort of broad rule. So again, employers are really going to be in the position of kind of figuring this out themselves, whether or not they really think in that type of environment it poses such a risk to employees that employees need to be provided with PPE. The low risk job descriptions are the ones you'd think of as, probably me at a law firm sitting behind a desk and not really talking to to many people during the day except over the phone. Those folks like me, probably, PPP in the work area is not really needed. If we can move on to the next slide. Another issue that OSHA has highlighted is the idea that, I think a lot of workplaces are going to be significantly focused on making sure that they are cleaning on levels that they didn't before, sanitizing, disinfecting work areas on a daily basis to try and make sure that, they're wiping out the virus if it did enter the workplace. And OSHA highlights here that these sanitizers and sterilizers could contain hazardous chemicals, and so that's something that folks should be aware of as well. On the next slide, we also want to make folks aware that so OSHA governs the federal standards. There are also 28 OSHA-approved state plans that operate statewide occupational safety and health programs. And to have an OSHA-approved state plan, it's got to have standards and enforcement programs that are at least as effective as OSHA's. They may have different or more stringent requirements. You see that New York is on there as a state with an OSHA-approved state plan. This will, the purpose of this slide is to highlight for businesses that may be operating in different states. You don't necessarily have to worry about just the OSHA standards, which, as I noted, right now are not particularly rigid. You also need to take into account whether there might be any state rules that could also apply. So we will move on at this point from OSHA. Oh, and the last thing we wanted to highlight, in addition to the OSHA guidelines, CDC has published some guidelines on their website. Also maybe worth checking out as you move towards reopening, give you some ideas about, best practices for how to operate your workplace. As you see there, they really have sort of three primary focuses. Reducing transmission among employees. A lot of these suggestions are common sense. For example, if an employee is showing symptoms, send them home. That's an easy way to reduce transmission. Maintaining healthy business operations. Again, use of PPEs, potentially, making sure that people are aware of, ways in which COVID-19 can be transmitted. And then maintaining a healthy work environment, which would include things like regular cleaning and, making sure that the workplace is sanitary generally, having hand sanitizer available, things like that. So that may be a resource that's worth checking out as well. And with that, I think we will move on to the next part of our discussion, which is testing considerations. So a lot of employers are very interested in the idea of testing employees before they come back to work for obvious reasons. Now, under existing law, the ADA would generally prohibit an employer from requiring employees to take a test or undertake a medical exam or answer questions about whether or not they might have an illness or disability. There are state laws that impose similar restrictions. And so under the ADA pre-COVID-19, generally asking an employee about symptoms, taking their temperature, requiring them to take a blood test or a swab would constitute a medical exam and potentially cause issues for you under the ADA. Good news, turning to the next slide, that the EEOC, in recognition of this very unique crisis we're dealing with right now, has relaxed the rules a little bit. So the EEOC has made it clear it is perfectly fine for employers to ask employees if they're experiencing COVID-19 symptoms like fever, chills, shortness of breath. Now we note there, and I think we may talk about this on other slides as well, to the extent you are maintaining any information about an employee illness, there's a requirement under the ADA that information has to be kept separate from the employee's regular personnel file. So keep that in mind. It's not like the ADA is completely out the window, but they have relaxed the standard with regard to checking employees for COVID-19 symptoms. In the next slide, you'll see the EEOC has offered similar liberalization with regard to temperature checks of employees. So no problem with asking your employee to, stick a thermometer in their mouth. It is worth noting, though, and the EEOC has noted this, and again, just in the interest of sort of common sense, individuals who have COVID-19 may be contagious, but they may not be running a temperature. So, it's potentially a tool that's out there, but certainly may not be a cure-all. And then on the next slide, EEOC has also issued guidance making it clear that employers can test employees for the COVID-19 virus. So that, again, is, real good news for employers. The issue here, probably two major issues. One is going to be getting the tests, which, as I noted at the outset, is challenging at this point in time. The second, obviously, is, how often are you going to test employees? I mean, you could test employees 5 days before you're planning on reopening, and if everyone is negative, that's great news. But of course, you have no guarantee that they don't pick up the virus within that 5-day period or, a week after you reopen. And that's going to be a real challenge for employers regarding how often they would run those types of tests. We can move on. The one unknown in the testing arena right now is whether or not antibody testing would be okay. EEOC has not weighed in on antibody testing specifically. They weighed in on all those other issues: temperature, symptoms, and testing for the virus itself. We would assume, based on that guidance, that it is probably fine for an employer to operate antibody testing, but it is a little odd that they have not specifically addressed it, and we may see that in future guidance from EEOC. So as I mentioned earlier, one thing you want to keep in mind if you do decide to implement a testing program is confidentiality issues. Again, ADA requires that all medical information about a particular employee be stored separately from that employee's file. You would want the employer to limit the access to the employee's medical information generally. EEOC did indicate that there is, in FAQs that came out, they don't have an issue with an employer disclosing the name of an employee to a public health agency if an employer learns that an employee has COVID-19. Obligations for whether or not an employer might have to do something like that are generally going to be governed by local law. And another EEOC FAQ indicates that if you're a temporary staffing agency or a contractor, you are fine disclosing the name of an employee with COVID-19 to the employer of the, in whose workplace they're being placed. In terms of reporting, again, there's some, really relaxed, OSHA is taking generally a really relaxed view towards COVID-19 generally, as I discussed earlier, not enforcing really strict rules here. As you likely know, under OSHA, there are reporting requirements that can apply at some times, but what OSHA has said with regard to COVID-19 is that there's no reporting requirement unless there is objective evidence that a COVID-19 case may be work-related and that evidence is reasonably available to the employer. I think in recognition here, it's kind of a vague standard, but I think it's in recognition of the fact that in many cases it's going to be difficult for the employer to establish whether a particular employee actually contracted COVID-19 in the workplace or if they, contracted it somewhere else and brought it into the workplace. But keep in mind, state OSHA reporting requirements may apply as well. That's going to be determined on a state-by-state basis. And then there may be some reporting requirements with regard to state and federal public health agencies. Again, reporting COVID-19 status is permissible under federal law, probably will be okay under state laws as well. The last point there, just another issue to keep in mind, FLSA considerations. You might want to think about whether or not, to the extent that you are requiring individuals to, if you set up a testing requirement in a return to work program, you'll need to think about whether or not that time spent related to testing would be compensable under the FLSA or state wage and hour laws. It's entirely possible that an employee may be entitled to compensation for that time, particularly if the test occurs during normal work hours, or if an employer was to require temperature checks at the beginning of the shift or after a break, that's probably compensable. If somebody has to wait in line to get a test, at least in some states, that time may be compensable. So that's another issue you want to be thinking about if you're going to implement one of these programs. One thing we at Groom focus a lot on ERISA and employee benefits. So one issue that has come up is, well, if I set up a testing program, have I, in the process, also set up a plan under ERISA, a benefit plan, which could create all sorts of additional regulatory requirements, like do I need to have a plan document, or do I need to report it to the DOL on a Form 5500? The good news here is we at Groom think the answer to this is, if you set up a testing program, it probably is not an ERISA plan, so you don't have to jump through all those hoops. Not really any firm guidance on this at this point, but there's a old DOL opinion letter from, I think, 1997, where they looked at a employee drug testing program and concluded that it wasn't an ERISA plan. So we think that provides a pretty solid basis for if you set up a program that is effectively just testing people for whether or not they have the virus without actually providing any sort of medical benefits, we think it probably falls outside of ERISA. Same analysis really applies to employee assistance programs or group health plans. A testing program is probably not going to fall into one of those categories unless it's actually providing medical benefits, which is not the intent here. This is just more of a screening process. So, interesting issues to think about, but we don't think there's anything to be worried about on these points currently. Staffing considerations. So these are some of the questions that have been coming in and some of the questions that have been answered recently by EEOC guidance. So I'll run through these fairly quickly because they may be helpful to folks out there. So can employers tell an employee with COVID-19 or suspected of COVID-19 to go home, stay home until you're cleared of the symptoms? The answer to that is yes, under the EEOC guidance. There's no issues with telling an employer to go home if they test positive for COVID-19 or have symptoms. Can employers tell older workers not to come to work for their safety? The answer to that under EEOC guidance is no. You can't just single out the older members of your workforce and tell them you don't want them to come to work because you think they're at high risk. As we have there on the slide, one thing we've thought about is whether garden leave, in other words, effectively just paying people to stay home if you have the wherewithal to do that, would be permissible. That's probably a little safer, not necessarily clear that the EEOC would sign off on that, but that is something that some employers may be thinking about. Can an employer tell a higher risk worker not to come to work for their safety? Somebody who, for example, is immunocompromised or, pregnant, for example. EEOC actually had initially said no to this question. You couldn't tell high-risk people they couldn't come in. And then they changed their guidance last week, which is interesting. What they said was that it might be permissible under certain circumstances to tell a high-risk person that they couldn't come to work, but the employer would have to make a specific determination that the work conditions and the possibility of contracting COVID-19 poses a direct threat to the worker's health, which is pretty high standard. So something to keep in mind if you do have employees, who fall into that category, you would have to do that direct threat analysis, and you'd probably want to check out the EEOC guidance, which is posted on their website with regard to COVID-19. It provides more details regarding how you would make that determination. What if an employee is afraid to come back to work? We've been getting this question a lot. The answer here, is it depends. I mean, I think the analysis here needs to be, first of all, you need to analyze whether or not the employee, has a actual legally supportable reason for not coming to work. For example, do they qualify for paid leave under federal or state standards? Do they have a note from their doctor? If the answer is that they, simply just don't want to come in because they're afraid of contracting the illness, that's probably, not a permissible reason for them to stay at home. You could certainly treat it as a constructive discharge if they're just not willing to come to work. And then it becomes an employee relations issue. You may, depending on the employee, want to work with the employee, see if you can figure out an accommodation. Can the employee telework, until things get better? That's just going to have to be sort of a case-by-case determination. In terms of hiring considerations, can you screen applicants for COVID-19 as part of the hiring process? Yes, you can, as to symptoms, or you can give them an actual viral test. But the EEOC guidance says this has to be done after making a conditional job offer, and you have to apply the testing equally for all entering employees. You can't single out certain employees based on different characteristics. Can you withdraw a job offer if you learn that an individual has COVID-19 or the symptoms? Answer to that is yes, you can if you need to fill that position immediately. But the EEOC's guidance indicates that you can't withdraw the offer if immediate employment is not needed. Can you postpone an employee's start date or withdraw an offer if the individual is elderly or pregnant? EEOC says no to that one, as probably not a surprise. Being at a greater risk doesn't justify postponing the start date or withdrawing the job offer. But again, maybe you can come up with some sort of accommodation like telework or postponement of the start date. So that is that for testing. I wanted to give a brief update on PPP, which I know is at the forefront of many of your minds at this time, and Andy gave a real good summary at the up front on the presentation. Loan forgiveness, yeah, I mean, that is where everybody's heads are at this point. The PPP program is kind of chugging along here. They've given out more than $500 billion in loans. The big issue for employers is how do I maximize the loan forgiveness? And those of you who are participating in the program are probably pretty familiar with the general rules, which is the amount of the loan that you're going to be able to get forgiven is going to be largely based on how you use the loan proceeds over the 8-week period following when you got the loan. And you have to spend it on the things listed here on this slide. The primary issue here, which has caused, I think, mass confusion and a fair amount of unhappiness, is after the law passed, Treasury came out with this rule that only not more than 25% of the amount that you request loan forgiveness on can be attributable to non-payroll costs. The justification for that in Treasury's mind was, the whole purpose of this program, it's called the Paycheck Protection Program. The whole purpose of it was to incentivize employers to maintain their workforce and not cut salaries. So they wanted you actually using these loan proceeds on payroll costs. Of course, for many employers, that's caused a lot of practical issues if they haven't been able to reopen, if they laid folks off and they are not able to get them back because those folks have decided they'd rather, not work and be on unemployment at the current time. There is growing pressure on Treasury to change that rule. A bipartisan group of senators wrote a letter to Mnuchin, Secretary of Treasury, requesting that he change it. There was a Inspector General report that came out last week that was critical of the rule, which largely because it had no basis in the statutory language. Mnuchin himself, was quoted, I think, in the Wall Street Journal earlier this week, indicating that, they were willing to reconsider the rule. But until we get that forgiveness guidance, which Andy was talking about at the beginning of the presentation, nobody really knows what to do. The advice we are generally giving our clients is that, in the absence of clear rules, if you want to maximize your loan forgiveness, it makes sense that you try and push as much money into payroll costs currently as you can, in the expectation that when the rule comes out, it may prioritize payroll costs with regard to forgiveness. But currently, we, again, are in sort of uncharted territory. And as Andy mentioned, our hope is that, the forgiveness guidance, which really should have come out probably weeks ago, will be out in the next week or so. And I think my colleague Seth Peretta is lined up to do next week's webinar. So we're hoping the forgiveness guidance will be out by then, and we may be able to, provide more information with regard to that. And then lastly, I think this is my last slide, COVID-19 4.0 legislation. So we've already been through a few rounds of COVID-19 relief. Again, assuming most people read the news, they probably saw that the House Democrats released their bill yesterday. I think the conventional wisdom is that while that bill likely will pass the House. It will be dead on arrival in the Republican-controlled Senate, but it is a starting point for negotiations with the Senate. Republicans in the Senate have conveyed publicly they don't see as much urgency for this next round of COVID-19 relief. That may be posturing, though, again, given, the reports that we're at 14% unemployment. Obviously, the country still has significant economic issues that need to be addressed. This slide lists some of the things that are likely to be part of whatever legislation eventually passes. COBRA subsidies, the House bill has 100% COBRA subsidies, which is, I think, the biggest federally subsidized COBRA subsidies that have been considered previously. We will see if the Republicans are receptive to that. Extension of the unemployment benefits, Democrats obviously very much in favor of that. Again, if you read the news, some Republicans are concerned that if the unemployment benefits continue to be overly generous, that folks will not return to work. Hazard pay, pension funding relief, employer liability relief. This is a big one for the Republicans. Again, Mitch McConnell has gone, he's been pretty explicit about this, that he thinks that, liability protection is absolutely essential with regard to future legislation. The U.S. Chamber of Commerce is behind this as well. They want to try and protect businesses from virus exposure lawsuits. I think Republican from Texas, John Cornyn, had drafted a bill also in line with this. Basically, what it would do is sort of we would shield businesses from tort liability for negligence related to COVID-19 if they comply with certain guidelines, and also try and limit state law tort claims. So there's going to be heavy resistance on the Democrat side from the labor unions and the plaintiffs' trial bar. So it will be very interesting to see how that plays out. And then cafeteria plan relief, that's the idea that you'd be allowed to let employers change their cafeteria plan elections mid-year. And just, folks may have seen this, but the IRS actually already came out with some guidance that is helpful in that regard yesterday. So that's another thing people may want to look at with regard to their health plans and their cafeteria plans. The IRS guidance suggests you can amend your plan and let people make elections in 2020 to sort of reflect all the disruption that's been caused by COVID-19. So with that, I think I am done. And if I'm done, I will pass it back to Jason.
Great. Malcolm, thank you so much. As I mentioned earlier, it really is great to have the insight that you provide and that Andy provides into helping educate everybody out there on this call today, certainly within Prestige, and everything that you were able to provide us today has been fantastic. So thank you. Before I get back into return to work with some actionable items that I wanted to take everybody through, I'm going to reintroduce Carol, who's going to take us through a few slides regarding some updates on the Paycheck Protection Program loan. And with that said, I'm going to pass it over to Carol.
All right. Thank you very much, Jason. I want to thank Malcolm for the input and information he provided us as well. Regarding the PPP loan, he's a little more in tune and has a better connection to the federal government than I do. So I appreciate all of that information. A few things I did want to talk about. There is a bill. It's in the Senate. The bill itself does have bipartisan support within the Finance Committee that will overrule that IRS notice that was sent out a week or two ago by the IRS and talked about a great deal by Steve Mnuchin, that said expenses paid for with loan proceeds would not be tax deductible. The senators on the Finance Committee are upset by this because they didn't feel that was the intent of the CARES Act, so they are trying to overrule the IRS on that. And then these next two items are not necessarily new things, but things I just wanted to add as a reminder. The safe harbor provision regarding the required certification that was made on the application And you will need to make again on your forgiveness, indicating that the current economics required you to get this loan to stay as a viable operating enterprise. That safe harbor to return the money, if you're not comfortable with having made that certification, has now been extended to May 14th. And then a reminder that the SBA has committed to reviewing all loans greater than $2 million, in addition to other loans as appropriate, which is about as vague as it can get. But I think that allows them to handpick any loans that they want to. So what is Prestige doing to be able to help you through this process? Well, we're writing reports for you to provide you the information you need as you go through the loan process and when you're going to need to apply for forgiveness. The first report is the FTE calculation report. Your head count in your 8 weeks or your FTEs in your 8 weeks need to be compared to look back choice periods. So we have a report right now that will show what your average monthly FTE count was for both of the periods, so that you know what bar you need to meet in regards to the head count reducing your forgiveness. For many people, FTE is an unknown concept. Don't you worry, we have a slide coming up to give you the basic explanation of how that is figured for you. But you can speak to your payroll specialist or your HRBP for any of these reports I'm about to speak about to have them run and sent to you so you have that information. The second report that has just been written and we just now have available for use is a loan forgiveness report that you're able to get during the 8 weeks as you run payroll. It's especially complicated for very large employers that have received the PPP loan to know how much money have I really spent that is eligible for loan forgiveness. Our invoice, when we send it to you, includes many costs that are not, and this is true of whether you're with a PEO or even a payroll company, because federal payroll taxes are not eligible for loan forgiveness. So we have a report that can be run with each payroll. This cannot be a cumulative report because of the way it needs to be calculated. But after each payroll, you can ask your payroll specialist or the HRBP to run this report, and we can tell you from that payroll how much of PPP eligible expenses did you pay, so you can monitor it as you go. And then the third report that's available right now will be when your 8-week covered period has ended. We will provide you with a one-page summary, which is essentially a total of the by week or by 2 weeks or whatever the pay period you had, to give one complete report for you to be able to submit to your bank for the forgiveness application. Now again, keeping in mind, there is no guidance yet of what that application is going to look like. As soon as we find out if we need to develop a new report for you, we most certainly will. Your bank, even with a guidance from the SBA, may request information in a different way. We've learned that through the application process. Citibank asks for one thing, Chase asks for something else. We will work with you to get you the information you need for your application, your forgiveness application. So those are the reports. So here's a question that has come up a great deal, and that is, how are FTEs calculated? Well, you know, when you're on a webinar with me, you get math. So here's our math lesson for today. We use the guidance that is set forth by the IRS in the Internal Revenue Code, section 4980H. It's a fairly simple set of math. In a month, we're going to say January in our example. First thing we're going to do is add up all of the hours that have been worked by our part-time employees. IRS defines what a part-time employee is, so there's no question, someone who works less than 30 hours a week. So I add that up. I have 5 part-time employees, and they worked 450 hours in January. Then I'm going to take that 450 hours and divide by 120. That number, we did not pick that number. 120 is in the IRC code. So we take 450 and divide by 120, and that gives us 3.75. Obviously, you can't have 3/4 of a person. So the guidance, the IRC's code says you round that number down. So this is not a standard rounding. You round it down to the nearest whole number. So 3.75 becomes 3. Then I add to that whatever my full-time employee count is for that month, and that gives me the full-time equivalent, or FTE, for that month. I had 6 full-time employees. I had 3 FTEs based on that calculation, so I now have 9 for the month of January. And our report, when you get it, we will do it for each of the months in the look-back periods, then figure the average, and then that is what you use as your bar to meet for your headcount during your 8-week loan period. So that's what an FTE is. So this, if you can always refer back to this slide if that question comes up within your organization again, so you can evaluate as you move through the 8 weeks what your FTE report is going to look like for the 8 weeks. We cannot run that report until your 8 weeks is over. So you will need to monitor your headcount on your own. And then the last thing I want to talk about, and this is what's been coming up a lot, is the fact that this 8 weeks, as of right now with the guidance we have, is for expenses incurred and paid. So a question that has come up has been, if at the end of 8 weeks, there will be 1 week of wages that have not been paid, can I run another payroll? Well, yes, you can run as many payrolls as you wish. The first caveat I want to add is that you need to notify your employees. Anytime you change an employee's pay schedule, you need to let them know. But what I want to point out here, the purpose of the CARES Act was to provide you with 8 weeks of wages for your employees. That doesn't mean, so let's look. So let's say the best way to explain this is through the example. If your standard pay schedule is your people are paid every 2 weeks on a Friday, and it was for week ending the previous Friday, let's say you receive your loan proceeds on Wednesday, April 29th. And based on your pay schedule, the next check date is that Friday, May 1st. So that falls in your 8-week period. It will be counted for loan forgiveness, but that check actually pays for hours before the covered period. We understand that. As far as we know, loan forgiveness is going to be based on pay date, not pay period. And then going through the 8-week period, your last pay date in your 8 weeks is June 12th. So if you look at a calendar, and I didn't include a copy of the calendar, but I think if you look at a calendar as you review this slide afterwards, you'll see you get 4 pay dates within your covered period. Does it cover the hours in your covered period? No. But it is 8 weeks of wages. And so in this situation, I would be hesitant to recommend to run one last payroll, because at that point you're essentially paying for 9 weeks of wages when you should have been paying for 8 weeks of wages. Now, clients and companies that have a weekly or a bi-weekly schedule, this works out really well. The difficulty, based on the fact that there's 31 days in May, and this is specifically an 8-week period, from the day you receive your funds, the disbursement, to exactly 8 weeks later, if you pay on a bi-monthly or a monthly basis, you could run into an issue that you don't get enough, pay dates within that 8-week period. That is a situation where you most definitely could run an additional payroll, again, I'm sorry, allergies this time of year, to get that 8-week of wages within your 8-week covered period. Again, please make sure you follow all of your labor laws to notify your employees of the change in pay schedule. So that wraps it up, and now I'm going to give it back to Jason to talk about the next most important thing these days, which is returning back to work.
Thank you, Carol. So As we wind down the webinar and wrap things up, I certainly wanted to take everybody through some actionable items around the return to work process. Prestige is putting together a specific return to work packet that's going to encompass a return to work checklist and different sample policies and form templates that you can use so that you can put together an actionable plan to help you bring back those employees. So before we get into that, just a couple of preliminary things. Obviously, right, what we're talking about is so prevalent these days, employees returning to the workplace. Again, it's a big part of what's going on in the business world right now, which is why we've been focusing on this for the past couple of weeks. Malcolm was able to provide us with a great deal of insight to the legality around the topic, and as I mentioned, now I'd like to take everyone through the guidance of what we've put together for employers to use. So the main question that we have right now is, what will reopening look like for employers? The employees start returning to their workplaces. As they return, many companies are redesigning and outfitting cubicles, conference rooms, cafeterias, things of that nature to help keep employees healthy and prevent another, flare-up of the coronavirus. So a large portion of the U.S. economy could remain fully or partially shut down or are operating remotely as the country struggles to contain the virus. At the same time, small businesses are really starting to think about what moves they might take to reestablish a regular work life, including such things like rotating schedules, virus screenings, cleaning, and providing PPE to employees, a lot of the stuff that Malcolm had mentioned earlier when he was going through his slides. However, forecasters do expect the outbreak to persist through the summer or longer. And, as a result, potential subsequent waves of waning and resurgence could happen until a vaccine or effective treatment becomes available. So there is a lot of inconsistency, As employers and employees return to the workplace, many predict that there could be a shift in priorities, such as a long stretch of remote work and sheltering in place initiatives. Even before COVID-19 changed our, quote unquote work lives, requests to work from home were certainly on the rise, while some employers were hesitant to put such policies in place yet. As HR business partners and client services with Prestige, I can say firsthand that these are a lot of questions and specific examples that we do get on a daily basis. However, now there is some anecdotal evidence suggesting that employee productivity has increased as employees work from home. So now employees have a bit of proof behind them when they're asking for these type of accommodations, right? And as a result, you could see an increased demand for more flexibility now, as I mentioned, as there's a proven case to support it. Also on the employer side of things too, and not to be overshadowed, is that keeping employees working from home can also help to cut costs. So there is a bit of give and take. There is benefits on both sides. But again, what we see here is that things could change, not just a mentality, but in how you operate on a day-to-day basis. Next bullet point talks about staggering the workforce, right? Staggering your employees in the workplace is also an option that employers are going to need to think about more and more moving forward. Going from a shelter-in-place mentality for 2+ months, if not longer, and then back to your office with other employees around you or taking public transportation, not everybody's going to be okay with this. And dealing with these types of issues is certainly going to be a challenge, right? We want to look to avoid concentrating employees all in one place. This means rotating schedules, splitting teams into different groups, staggering the workforce. These are all good options to think about moving forward. And don't be afraid to experiment. Different ideas can definitely help to put things into perspective. And just because you put a specific policy in place does not mean that it can't be changed in the future. So don't think that you're pigeonholing yourself into a certain thing just because you made that specific policy. So finally, on this slide here, the ultimate goal is to reestablish the workplace. right? If you haven't already organized a task force, and this is something we're going to talk about in another slide, but if you haven't already organized a task force, this is something that you certainly should do to help create and manage the new workplace that we're about to venture into. You know, create a guide for safe practices at work during the pandemic that includes steps for cleaning, disinfecting equipment, staggering shifts and lunch breaks, and creating protocols for isolating those employees who come to work sick. So, you know, those are the basics of what we've been talking about and what we've been pushing, right? So with workplaces being dramatically transformed by the pandemic, you know, putting together a plan to maintain employees' physical safety and mental comfort isn't going to be easy. You know, again, we've never experienced anything like this before, and as a result, our employees have been exposed to a much different type of work life. And as we've discussed, this could change the way that we move things going forward. At least this is a way that some employers and some employees are thinking, and that's what I wanted to take everyone through on this slide, really just to show some percentages about what's going through employers and employees' minds. You know, these statistics are based off of, you know, surveys that were put together or conducted by Willis Towers Watson. You know, many employers state that they will accommodate a working from home scenario if it's possible for employees when they move forward. You know, also nearly 6 in 10 companies expect that their work from home policies will remain in effect even after the pandemic ends, while roughly half expect to continue offering flexible work arrangements. Ultimately, what this shows is that the majority of businesses polled believe that changes in employee culture, in employee mentality, work arrangements, this is going to continue well past the epidemic or the pandemic, you know, and it's not necessarily a bad thing, but it's not as if we're going to go right back into the workplace, business as usual. So let's get into some of these actionable items over these last 2 slides they're going to take you through. You know, clearly, returning employees to the workplace during and after the COVID pandemic just isn't going to be as simple as opening the doors and carrying on business as usual. You know, the details of each employer's plan to return is going to look different, but there are a number of key issues that most will need to understand and start preparing for now. As mentioned, Prestige has prepared a return to work packet for employers to use as guidelines for reopening their office for employees to return to the office. Now, this documentation will be uploaded to our COVID Resource Center section of the Prestige website, but we'll also be sending it out to all of our clients. And again, I just want to refer back to the COVID Resource Center on the Prestige website. It's a wealth of knowledge. It has everything that we talk about in each webinar, a recording of each webinar, as well as the slides, and a great wealth of knowledge that we get on a daily basis from our clients, from the insight that Andy and gentlemen like Malcolm are able to provide us, and it's all housed there. So going through some of the items that are included on the checklist that you'll be able to operate off of. You know, workplace safety should be considered by addressing areas such as social distancing measures, PPE, which is personal protective equipment, business travel, and dealing with visitors, among some other items included under that category. Recalling employees and internal communications will provide details on how and when to bring back employees to the workplace, what the employer needs to consider, and how to properly communicate with employees internally to solidify procedures moving forward. Having a plan in place is certainly going to help employees to have more comfort within the office, within that workplace when we do get back to that point. Employees should be notified in writing if there will be any changes in pay and if there will be a need to create or amend any of your existing policies. And finally, employers should definitely prepare and be aware of any employee morale issues that might crop up when employees do return back to the office. Make yourself available. Communicate with them. You can also consider other options, such as adding an employee assistance program for your employees, and I know Malcolm mentioned that earlier as well. And as we've discussed over the past couple of webinars, and just in the previous slide, creating a task force to help monitor federal, state, and local regulations, as well as managing the return to work process, is certainly going to help to oversee the success of the plan. So this last slide I want to take you through is really goes over some of those policy templates, request forms that are included within that return to work packet. The notice of recall, this is a sample communication that employers can use to send to their employees as they begin their employment recall procedures. Employees are going to be concerned about their status or their hours or their pay or other conditions such as benefits changing based upon their return. And this is a way to provide those employees with a peace of mind by confirming all of this information on that notice. This is what we're doing. Here's when we're calling you back. Here is your information that includes your pay, hours, benefits, and status, and a plan moving forward. This will all help put employees at mind. Now, in the event that an employee comes down with the coronavirus in the future, and that's the reality, it could happen, you're going to need a process to notify employees of the exposure and to explain what measures that the organization will be taking. This is not only going to help contain the spread moving forward, but also provide the necessary information that employees need to know in order to care for their own health and honestly to care for the health of other people that they are around. The remaining documents that you see on this list were put together as samples to ensure that employers have the verbiage they need should they need to create these policies. Social distancing requirements honestly should be posted in all common areas and all points of entry to remind employees and visitors of what the requirements are. And the work from home setups, and with work from home setups sticking around for the near future, a policy certainly should be put in place so that employees are aware of the rules and the requirements. And as we've discussed, it is possible that you may see a wave of paid time off or vacation requests that come in from employees looking to take time off. Again, a lot of employees, as we've talked about, working from home seems to increase productivity, and during this time, a lot of employees have worked a great deal of hours. So it's once they get back to the office, you know, if you haven't already, you may see those vacation requests come in. And honestly, from my perspective, it's well earned, and we want our employees to refresh themselves and rest and relax and take that vacation time. But we also need to prepare to make sure that all of the work is covered. Or, you know, on the flip side, employees may get sick and need to take that time off as well. So instituting a clear policy, reminding employees of their policy should, and the request process should help to minimize that glut, help you to prepare for those requests in the future. So, yeah, as I mentioned earlier, I just wanted to remind everyone the entire return to work packet will be placed on the within the COVID Resource Center in the Prestige website. And again, we will be sending a copy of this packet to all of our clients. But that wraps up what we wanted to talk with everyone today. Again, you know, obviously it revolved a lot around return to work and some updates around reporting for the loan forgiveness. But I hope we were able to answer any questions that came through. Any remaining questions that we do have, we'll certainly get back to everybody. And again, as we wrap up here, I just wanted to remind everybody on this last slide that your daily support from Prestige is here. You know, I want to echo what Andy said earlier in the presentation, is that this is what we're here for. We're here to support you. We're here to update you with all of the necessary information. And again, it's nice to have that insight to provide to everybody. So, you know, use your daily support from your client support staff that you see on the slide here. And we will continue to have our weekly webinars and send email communications to everybody. And please visit the COVID-19 Resource Center within the Prestige website for more information. Thank you very much, everyone, and have a fantastic Wednesday.